Welcome, welcome. Wednesday, 11 a.m. Central Time. Dave, right on target, and we are here with you. Welcome, welcome.
Thank you. Glad to be back. Always exciting to be here every week.
Dave, it's always fun because we get on before the show and we talk about all these things. And I was just telling you, I'm like wiping tears out of my eyes from all the things we talk about and all the laughter. So I hope we can make it a nice, fun show, but also keep it good today.
Yeah, me too. Me too. We've had a lot of funny things going on from different people we're coming in contact with.
So, Dave, let's talk about it because you've opened up your calendar. You've been meeting with a lot of different people and really going over and talking about plans and just trying to help people get prepared for retirement. What kind of things are you seeing as you're getting more involved with this?
Yeah, the interesting process as we go through this, especially the sheer volume of people we're connecting with, interesting process, how many of them feel like they're the only ones messing up and yet everyone's messing up. I mean, it's just one of these things. They're like, oh, I'm behind. I can't believe that I'm here. I haven't done what I should have from protecting my assets and all these things. And it's like, look, you are not alone. Almost anything that I've ever heard, it's like I've heard it two or three times from people. So it's one of those things that people just need to understand that, yeah, we all make mistakes. It's just important that we get on track. And then from here, hopefully move forward doing the right thing.
And that's such great advice because as we're here, we're trying to help inspire everyone to take action and do something. And so it's nice to hear that we're all kind of on the same boat. We're all getting through this together. But the ultimate goal is to make sure we do something instead of saying, oh, great advice, Dave, great information. I'm going to go back and continue working on Facebook or Instagram and forget about what you said.
Yeah, and that happens all too often. And we try to help people not allow that to happen. But by nature, humans are procrastinators, and we want to put off till tomorrow things we should do today, believing that either somehow they'll solve themselves or maybe the problem won't be as bad as we're thinking it could be. But retirement's not something you can do that with. I mean, this is one of the challenges we're starting to see it play out. The things are happening, and people's retirements are falling apart, and the problems are coming in that people are trying to avoid.
And Dave, we do have a lot to talk about today. Again, we've got all of our questions that come in. So if you are here live or on replay, we welcome you and we encourage you to submit your questions at retirementriskadvisors.com/questions. Go ahead and put in the details there. And we take the questions from there, from social media, from webinars, and we gather all those and put them together here so we can get all the questions that you have been asking throughout the last week. And we give them to you, Dave, and we hope that you can go through and talk about these. Again, we may not have answers to everything, but we sure have some advice we like to give because, again, we want to just help people move forward and stop sitting back saying, well, I can't do this or I don't know, so I'm just going to sit back and wait until I get the right answer.
Absolutely. No, I want to be a big benefit to those that have questions and concerns to get to a better place.
All right, Dave. So I'm going to pull up my first question here because, again, I've got a lot of questions to go. This one's from Roger. How can I make market volatility work for me while also protecting my assets?
Roger, the biggest thing that you've got to do when you look at this is you've got to not go backwards. I mean, that's how you make market volatility not work for you is you get in a product to where it's not going to go backwards, but then as it turns around, you're not missing the upside growth either, which is one of the problems many have in trying to time the stock market. I mean, if you look back just over the past 6 months, the volatility of what's happened, if you could have got out at the bottom and in at the top every time, I mean, the amount of money you could have made over just the last few months, but that never happened. People go out usually after it's dropped down and they're going, okay, I can't handle this anymore. I finally take my money out. And then the market goes back up and they don't jump back in until it's too high again. So principal protected products allow us to do that. And these are sold by insurance companies. We call them a lifetime income fund and a life insurance retirement fund, both products that are indexed that allow us to not go backwards, but have the upside growth as it becomes available.
And Dave, while we talk about high risk may produce potentially high returns, but does excess risk taking become harmful?
It can. I mean, when we look at it, especially if you're getting into those close retirement years, and again, how much excess is excess? I mean, ask anybody that bought Bitcoin at $60,000 a share or a coin, and now it's down to 20. Yeah, that became very harmful, and no one's quite certain if it's going to fully come back. I mean, there's a group that believes it will. So, and if you had to retire at this point and pull it out, now if you can let it sit there and it's a small portion of retirement and takes off over time, then fine. But unfortunately, many times we just can't time it. So we've got to be more cautious so that we don't end up risking blowing everything up.
And Dave, one of the things as we get into talking about people in retirement is they're really relying on consistency. So if they're talking about perpetual withdrawals from portfolios from their income, so what we talk about here is running out of money is the worst case scenario that we probably should talk about and help people to avoid this risk.
Yeah, it really is. A lot of what we do, I mean, we look at it from a risk standpoint, but it's really distribution planning. It's really coming in and saying, okay, how much money can we pull out of what we've got throughout the rest of our life to maintain a lifestyle that we want to live and yet not run out before we get there. You know, and that obviously, the more that you can put in guaranteed products, the more you can put in guaranteed income products, the better off we're going to be. But it's just a tough thing if people aren't willing to put in the time to get the products, the knowledge, the education to do it.
And Dave, a lot of this as we get on before the shows, we read different forums and different blogs, and we talk about different things as we're coming and connecting together. But as we look at this, say investment choices, they come in. I read a lot of them that say good risk return. And that profile, if we look at that, is that something that how do we determine what a good risk return is? I guess let's go there first.
Yeah, I mean, we can go back over time. I mean, again, if you look at it and you say, hey, the S&P 500's done 8 whatever percent over the last 100 years, that we say, okay, I mean, if we're comparing it to the main stock market, that I would say, and over time is going to perform very well in a secure environment. You know, what type of risk are you going to take? And again, you know, if I'm the sales guy, what may be a good risk return for me is not what is a good risk return for you. So we see a lot of marketing out there where people have very risky investments going on and they're going, oh, yeah, this is a great risk return. Well, not really. So it's just looking into the products and getting the education to make sure you can assess that for yourself, that you can see really what are the risks and the history of the products or the, you know, the investments, and then be able to make a decision based upon that.
Dave, I like when you bring up the education, because we'll bring up something is I've looked up and I kind of was saying, okay, what's good risk return? What do we deem that as? And some people even talk about certificates of deposit. And we've talked about that as certificates of disappointment here, because I don't see that as a good risk return. But then you talk about something like I bonds and say, hey, there's a difference. So I like that you say there's multiple options, but it's making sure that you're getting the education instead of just saying, well, my buddy does CDs, so I think it's going to be okay if I do.
And it's timing, CR. The one thing we've got to understand is very few of these products are going to work indefinitely for you. You know, it's just like you think back of when the you know, that first block phone came out that we all had back when cell phones first came into existence. Well, everybody wanted it. You couldn't wait to have it. And you're thinking, hey, this is great for what we have available. And then the flip phone comes in. Now, you know, the iPhones and all these things we have made it better. Well, can you imagine still having that big block phone and walking around? Well, this is what people do with their retirement assets. Again, certificates of disappointment have been horrible for the last 2-3 years, but the interest rates are going up. So it may get to a point. I mean, we're expecting another 0.75% interest rate hike today. You know, we're expecting another one that within the next month or two. So all of a sudden you're saying, hey, once we get these in place, do those become decent investment tools if the inflation starts going back down? And that's like the I bond. You know, again, I would encourage anyone to buy an I bond right now, even knowing you may not keep it for 5 years, and even knowing if you don't, you're going to get penalized by 1/4 of interest. But if you're saying, look, I'm at 9%, 10% right now, if I can get that for a year, hey, that's unbelievable. And then after that, if I have to take a haircut, well, wait, I got way more than I would have gotten anywhere else. But again, I bonds are going to be horrible in maybe probably in 2 years from now, CR. If I look out from what I'm projecting of there being a deflationary period in 2 years from now, that I bond, the guaranteed rate on that is a big fat donut egg. I mean, it's zero. So you're not getting anything out of this product in 2 years from now. But if people aren't paying attention, they're like, oh, I got this amazing I bond. It's going 9.62%. Well, no, it did that your first year. And now you're making absolutely nothing on that product. It's just sitting there.
And Dave, again, we're here to make sure we're giving you the best education, the best opportunities to grow and to avoid risk. I think that's the one thing is we're not here to say, let's get you the most risky investment. We're here to say, hey, let's help you make the best educated choice for your retirement.
Yeah, absolutely.
Well, Dave, let's continue to move on here. And I do want to remind those that are here with us live, if you do have questions on Facebook or YouTube, go ahead and get those in our comments, and we'll do our best to squeeze those in when we have time throughout the show. All right, Dave, from Gianna, I have an annuity and a 401k. What should be my next retirement investment?
Yeah. So if you look at this, and I don't have enough detail to understand, obviously, is a 401k a Roth 401k that you're investing into? Is that annuity structured correctly to where it's going to provide you the benefits? Assuming that's the case, one of the other things that I would definitely have someone look into is the life insurance retirement plan, because of the long-term care coverage that it offers, the tax-free growth that it offers, and the death benefits that come with it. So when we add all that in based upon getting one that's a low fee product, what we realize is they can be great additions to what's going on here. But, and all of that being said, we got to make sure our buckets are aligned correctly. So do we have some money in our emergency bucket? If we don't, we need to get that filled up. But, where's that 401k and annuity? If they're in a deferred account, is it too much? Do we need to do some allocations and redirect how we're doing our investing? So I wish I could give you exact answers, but again, these are some things to think about as you're looking at what you should do next.
Dave, and you brought up emergency fund. That's another one on my list here. Is this also a good time to boost your emergency fund? Can you overfund that if we say, okay, there's 6 months of living? How do you boost that, or is it a caution?
Yeah, you absolutely can, and most of us do if we're savers. Now, again, there's the other side. If you're a spender, you're probably way under what you should have, because the money goes into the bank account and it goes out. But I've watched it even in my own life. In fact, I was having a meeting today with someone that probably spends similar money to what I would spend, and they told me how much they had in their emergency fund. And I'm going, whoa, that's all you got in there, which was probably enough. But over time, you get to this point, and again, having as many kids as I do, you think anything can happen, but we allow our mental state to get to a point that we may overfund that, and some of them substantially. We don't want to do that. We want to make sure we're staying within a guideline, or we're going to create all kinds of excess risk.
And Dave, if we're talking about Gianna, let's say that they've already maxed out their 401k for the year. And is it safe to say that don't forget to make sure your spouse is also taking advantage of maxing out their 401k contribution limits as well?
Yeah, absolutely. If they're married, you'd want your spouse to make sure they're doing it, and make sure you're working together on this. We see it all the time. We have these meetings with people, and one of the spouses shows up. We explain what we do, and usually it's the one that is the financial decision maker. Which most relationships, either one or both are there, but most have the one person that makes most of the financial decisions. And so we have these meetings. Like, hey, can I talk to my spouse? I'm like, we expect you to talk to your spouse. We hope they're involved in these meetings. We hope they're part of the process, because last thing we want is to get to the end and you put a full plan together and they have no idea what's even going on or what's happening.
Yeah, very wise, Dave. So we've talked about life insurance retirement plans, the 401ks. Dave, we can even mention IRAs, but let's also talk about something that came up on a recent podcast of yours. How about HSAs, and what can we do for that part if we're talking about putting a little bit more money aside?
Yeah, what you've got to do is one, make sure your insurance qualifies. And this is something that's very hard for people to believe, because there's many plans. In fact, I'm in the process, just had to switch insurance at the 1st November from Medicare because of my kidney transplant onto the exchange, because we're so spread out. We don't have employer coverage. Well, if you looked at many of those plans, you would say they were high deductible plans. As you look at them, some of them $5,000 or more deductibles, without a pocket, $8,700, $9,000, somewhere in that neighborhood. And yet here they didn't qualify for HSA eligible. And when we had our podcast, this is one of the things that was talked about on there, is saying it just doesn't make sense the way they make some of the plans eligible and some not. So first, you've got to make sure your plan's eligible. And then if it is, make sure you're contributing as much as you can, because if invested correctly, it's a great place to have money where you didn't pay tax going in and you're not going to pay tax coming out on medical costs that most of us are going to have before we pass away.
All right, great. Well, thanks, Dave. Let's jump down to our next one here from Donna. Would it be feasible to have both a life insurance policy and a long-term care plan?
Yeah, if you're in a situation where you have these, I'm in one of those. This is me. I bought a long-term care policy years ago before the insurance policies changed that allowed for chronic illness riders. And then when they came out, bought a policy with a chronic illness rider. So yeah, if you look at it from a coverage standpoint, what you're trying to accomplish, again, if you've got a good long-term care policy that you've had for a while, or you find one that works within your budgets and your plan, then use the life insurance for other income. Use it for a death benefit. I mean, there's many things you can do with the life insurance beyond long-term care. It's just nice if it has a rider to be able to cover that if you don't have any other solutions.
So, Dave, what is the appeal if we do the combination policies?
If you looked at it, would be to be able to have more freedom with that life insurance policy, because if you're keeping it there for a long-term care event, hey, you probably shouldn't touch the cash value inside of there until you have a long-term care event. And again, if that's the only reason you're holding out on that policy, then hey, maybe I want to redirect my money elsewhere to where I can get more access to it. But again, with the cost of long-term care insurance right now, it's so hard for people to be able to afford that and then also do an insurance policy that they're using for some other investment, can become very difficult when we look at the price versus saying, hey, let's just buy an insurance policy, or maybe even two insurance policies, life insurance, that one will cover the long-term care because it's much cheaper than buying that long-term care insurance.
Dave, I feel like in the industry, there's some things that I feel like maybe some wording needs to change. Let me preface this by saying this is perfect for you in Tennessee, but if you need car insurance, you should look into this, right? Because didn't you say that not everybody in Tennessee is insured for car insurance?
Yeah, or Georgia or Utah or anywhere else. I mean, if you go on, about scares you to death, because the national average, I think we may be as high as 26%. I know some states are, but national average, about 20% of people out there driving do not have insurance. So yeah.
Yeah, so I bring that up because I always read all of these different blogs, Dave, just because we're always trying to consume. But it says when it comes to long-term care, many articles are saying if you need long-term care, the biggest risk of buying long-term care insurance if you need. And I feel like that's the thing, is we're always looking at, well, if you need car insurance. And Dave, you're telling me that the car insurance, we're going to have a small percentage, but with long-term care, it's a higher percentage.
Yeah, 35% chance, and it's going to grow. 35% chance we have a long-term care event, which means 1 out of 3, if you're a married couple, add one more person in the mix, and one of you is going to have a problem. So as we look out, again, the longer we live, the bigger problem it's going to become, and the more expensive it's getting. So we've got to have some type of solution there. And I get, for some people, they're not going to be able to afford the best solution. So then it's coming down to saying, okay, for what I can afford to pay for, that's going to get me to where I need to be. Now, again, doesn't do you a whole lot of good if you're going to end up in a Medicaid funded facility anyway. To spend a bunch of money on insurance, it's going to put you right in the exact same spot you would have been if you'd allowed the government to take care of it. But the other thing we've got to realize, these states are starting to kick back. So right now, 2/3 of us are able to use Medicaid. There's a point they can't afford that. There's a point, and many states, the state of Washington is one of them that's being very aggressive right now. They're saying, look, we cannot continue to pay these amounts out to have people stay in these homes for 10 years, some of them 20 years, the longest stays in some of those homes. So they're trying to make people actually have to buy it, much like you'd pay your Social Security and Medicare taxes, have to have some plan in place. And I'm not against it at all, because we shouldn't expect the government to take care of that, but it's going to become more and more expensive. They're problems we're going to have to figure out how to solve, because they're going to become more problematic. So why not take it off the table, do our part, get it solved, save the money, be responsible, and then life can just be easier, and you don't have to worry so much about policy change.
And Dave, I really just want to add, if you really need to get one of these hybrids, if you're looking to this, make sure you get advice before you decide what's right for you. That's really going to help you right now, because if you're out there just trying to pick policies and trying to put this together on your own, you're going to be struggling for a while.
Yeah, it's one of the nice things that we have, and I don't know. I guess I respect people that are out there working, and you may be a captive, but I struggle with that. I mean, if I'm captive with one company and that is all I can offer, I will promise you, every company out there does not offer. If you're with one company, offer the best life insurance, the best long-term care insurance, and the best annuity. They just can't. It doesn't work that way.
Hmm.
They have to give somewhere to make everything work. So to be able to have 50 companies, you can say, okay, if we're putting these together and have 200 people on a back end office to be able to analyze this stuff and say, okay, if we're looking at long-term care policy, what is the best option based upon the state you live in, what other companies are doing, what you're trying to accomplish, what's the best option for an annuity if you're looking at that. So again, we want to have those freedoms and the ability to decide. Now, that doesn't mean that if someone's captive, that company they work for may not have the best long-term care policy. But again, I'll guarantee they don't have the best life insurance and annuity products as well. You don't see it out there.
Yeah. Well, Dave, my next question, I'm sure, is going to be on your mind as well. And you've probably had several thoughts about this one, but this is from Sophia and George. How can we make sure our disabled son is cared for after we are gone?
Yeah, so this is something near and dear to my heart. Obviously, many of you know that I've got two disabled children now that we've recently, one's been adopted and got some good news. Looks like 1st of December, we'll be able to
Oh,
finalize the
cool.
adoption on the second one. So
That's
hopefully by
awesome.
the end of the year here, we'll be in a good place. But I think there's two sides that you've got to look at here. One is a financial care, which probably is maybe even easier than the emotional and relationship care. We've seen it inside of our own home with these these two kids. One's a 9-year-old girl, one's a 7-year-old boy. The attachment that these kids have gotten within this period of time, and the dependency upon you. I mean, my son won't hardly eat for anybody unless I'm there, which we're
Mm,
trying to solve that. He needs to be eating with other people feeding him. But if I leave, that's his kickback. Hey, I'm just not going to eat because dad's not here. Well, so you've got to look at that as well. So we've got to take them both into consideration. Now, financial side, I would look into trust, for these children. I would look into guaranteed products that would allow there to be income just coming in. From an emotional side, you got to figure that out. Do you have family members that can step in and are willing to step in? What are the facilities in your area? Where would they end up having to go? And what does that look like? Going to require some homework to be able to figure all that out.
Dave, I like that you brought that up. I kind of brought up three things too, and we look at money, housing, and the emotional care. I think those are the three things I brought up with that too, that you will have to kind of balance that out. So I like that you're talking about the balance there, because there's a lot of things that go into play with this.
Yeah, and it is. I mean, it's like Alexis. She's the Tasmanian devil if she doesn't know who you are. And you know what? I don't blame her. She's spent years and years with surgeries and doctors and pain and all those things that come with that. That now you're at a point that you built that relationship. It's very manageable in dealing with her. But it's again one of these things you're going to start that all over again. I mean,
Yeah.
after years and years, even of being with people, they're still going to have that trauma. So you're right. It's how do we make that transition? How do we get them into a position that hopefully they can transition as well as they can?
Dave, one of the things I wanted to bring up, because I mean, again, as you're meeting with different people, you're meeting with people, and some of them are coming to you saying, "Hey, Dave, I'm not ready to do anything, but I just need advice." And I really admire you for doing that, because you've had many people that have come on, even a particular client that said, "Hey, I've got a special needs, and I'm trying to work through this." And I wanted to ask you, is it important to help parents with special needs children on how to approach other family members and friends regarding maybe the care of the loved ones and the finance and the special needs going forward? And how do you do that?
Yeah, it's an interesting guideline. We see that, line that you follow, and we're seeing it ourselves right now because it is such a unique experience. Most people don't know how to interact with these kids. They're not exactly sure what to do. Though many of us are scared by, hey, do we say the wrong thing, especially in this world where everybody gets concerned about titles and those things. So everybody just kind of shuns away from it. So yeah, there's a process, and it's going to be painful. I'm going to tell you from my experience of doing this, there's going to be some pain with that in getting people where they are and accepting some people just aren't going to accept. Some people are not going to just say, hey, look, it's not for me. I'm glad you're doing it, but this isn't something I want any part of. And that's okay. But you got to be okay with, what, we all have our agency. In our situation, we chose to be in the position. I know many people can't, and I have such great respect, but it's like, you've got to be okay being okay that, hey, if people
Mhm.
have a different opinion, but I've got to be willing to put myself out there to have the conversations, to see what options are available, or you're going to be in a position where you'll never know. And unfortunately, that's probably going to turn out worse than better.
Yeah. And Dave, I love your stories. You've had some very heartwarming stories. You share that things that are personal for you, even for your family when you're out amongst everybody. And I hope people realize that, as you're moving through different phases of life, we just want to make sure we're prepared no matter what happens, no matter if we have our disabled kids or we're just empty nesters or have young kids. We just have to make sure we're planning. And I think that's the point I'm trying to get across is let's do something.
And we can't read minds. That's the other thing that you've got to understand. We had a situation even in our own family that my wife and I had made some decisions. We'd had a chance to talk extensively about it, and we'd come to a conclusion. Well, we hadn't been able to talk to our kids yet about it. And then an experience comes up to where our kids take a whole different path, not knowing. Well, that can become very offensive, and did to my wife. But it's like, wait a second, they didn't know we had already gone down this road this far. So, it's just being able to communicate amongst yourselves. I see too many families break apart. You look at disabled children or family members, and even going into this, when we get into long-term care facilities, it can pull families apart. And that's not what we're trying to do. We're trying to work together to make sure we're there to support each other.
Dave, I like you bring that up because I think we'll have time for maybe one or two more questions here. This is from Belinda. If I am unable to qualify for long-term care policy, how could I pay for long-term care when I need it?
Yeah, good question. So one would be saving enough money to pay for it yourself, which is, you may or may not be able to. Number two, coming to the realization you may be in a Medicaid funded facility, and it's okay. They're going to take care of you. They're going to make sure you're fed, that you live, that you have a place to sleep, and all those things. You could look into an annuity that the payments would double during a long-term care event that may not only solve a income need that you would have currently in retirement to match up with their social security, but to also be able to match, have that available to cover some costs, and then potentially a life insurance policy. Again, long-term care is based on morbidity. Life insurance is based on mortality. So it may be a situation where you couldn't get long-term care, but could get the life insurance. But all that's got to be looked at, taken on the table, and then come to the best solution, and understand sometimes the best solution isn't really the perfect solution and what you would like it to be.
And Dave, does having a healthcare challenge in your past become an automatic disqualifier for this?
It can, depending on what it is. So, if we look at it, and you have to go through underwriting and talk with the various insurance companies to be able to do this. And that's why so many times when we're going through the process, we're submitting applications, one, to see what the best companies will offer, and two, maybe the best company won't take it, but a second tier company will. Well, then you weigh the risk. Is it worth paying a little extra money or having less benefits to be with this other company? But it's all part of that process, and it all takes time and decisions. You got to be willing to just kind of take your gut, make a decision, and be willing to stick with it.
So, Dave, if I open up more credit cards, obviously my credit score goes down. But does this also happen if I get declined maybe at one long-term care provider? Can that lessen my chance of getting approved by another?
Not that I've seen out there, because again, different insurance companies have different risk tolerance. They may be in a situation, again, if you're a small company, let's say if you were in a small company and you had one policy, or two policies, you said, hey, I've got a really good one I'm solved with, and I'm going to allow this, have this other one come in. Well, I don't want a very high risk policy that may blow up on me if that's my situation. But hey, if I've got 300 policies out there and all of them are good, and yeah, maybe I'll take this risk, because hey, if it does go bad, still not going to kill our company, but we're hoping and looking at it, and think there's probably a low chance it will. They may be able to accept that. So it's really individual companies that are making the decision, a lot of based on size, their risk tolerance, what they're willing to accept inside their business model. Because in the end, obviously they've got to weigh it out and say, okay, if these things do end up happening, do we have the money to be able to make sure we keep going forward as a business?
And Dave, great advice as always. And I know our time has come and gone so quickly. I feel like we turn it on, get it all set, laugh, and then pretty soon we're already done. So
Yeah.
we're just flying through here. But I don't want to miss the opportunity to bring up this here, Dave, and remind everyone about our flagship webinar that's out today. So in fact, we have it on most Wednesdays, which has been very, very awesome. Keep it very consistent. Tell me about this, Dave, always as we talk about this webinar here.
Yeah, I love this webinar for many reasons. One, because it really lays everything out for people to see what the problems are, but two, because it gives solutions. It lets people know what they can do to take action and to start changing this uncertain world they live in into a more certain world of things that they can do to make their life better.
And you can get this. And if you can't make it Wednesday, we've got next Wednesday as well. But you can go on to retirementriskadvisors.com/events or /safe. And that will take you to either the information you need to be able to find out all the times and dates and everything to make it available. But Dave, you have that this afternoon, a very, very exciting 2 hours coming ahead.
Yeah, 3 to 5 Central Time. Very excited. Please join us if you haven't yet. Would love to have you be part of the experience. You get to ask your questions. I mean, it's just 2 fun-filled hours, and we've got a lot of people coming today. Very excited. Got a large group as we're approaching the end of the year. People are starting to, get ready for their New Year's resolutions and make decisions that are going to help them get on track for 2023.
And Dave, I just want to ask again, we've talked about long-term care. It seems like a lot today and maybe some other, other topics, but what do you have on your mind as we're leaving for this Wednesday that we can share to kind of help those that are coming on replay to say, hey, this is your chance. Today's your day.
Yeah, so it may be a little different than what you'd expect, but we're in November. It's Thanksgiving time. Folks, be thankful for what you have, but also don't get complacent to where you don't make additional changes for your future. Again, don't beat yourself up over the past. Be grateful for your mistakes, your experiences, what's built you up to this point. But then let's move forward with passion and compassion for people, and try to make our retirement better than it may be today if we don't take action.
Well, Dave, thank you so much. I know you have a very, very busy weekend coming up, and we appreciate your time and squeezing that in to be with us today.
You're welcome.
All right. We'll see you guys all again next Wednesday, 11 a.m. Central Time. And again, if you missed your questions for today and you just really want to get that question answered, go to retirementriskadvisors.com/questions, and we will get that on our next show. But until then, we'll see you next week.
Bye.